Hello traders, this video is about Fibonacci bullish traders. Alright, Fibonacci bullish traders, okay. If you are a Fibonacci bullish trader, there are few things you need to work with. This is very, very important. One of the mistakes that traders are making, especially swing traders are making, is the violation of the market pattern. This is the biggest swing trading mistake. The same thing for day trading. One cannot achieve consistent winning trade if one is violating, okay, the market patterns, not the price pattern, but the market patterns. Rising channel, declining channel, horizontal channel. There are three market patterns. So as a bullish Fibonacci trader, your market pattern is the rising, okay, channel. You do not want to apply your, okay, Fibonacci tool outside this pattern. So you want to buy at 38.2, you want to buy at 61.8. Make sure that you are in a rising channel. If the price out of a rising channel, the next thing that you can use, all right, can be either Elliott wave pattern, all right, stochastic patterns, all right. These are the or Fibonacci pattern itself. That's the only time that you can violate, okay, your market pattern. Can I say this again to traders? For bullish Fibonacci traders, your favorite market pattern is the rising channel. So if you are, for instance, here, so you see the price is in a rising channel here, so we need 2 points to draw the channel. So there's 3 points. So this point, okay, and in fact I can put it here. In fact, we can draw it here. So 1 point and 1 point here, 2 points, and we need another point on the top. So I can move. If I move it like this, that will be very short one. So this point, can you see on your chart? I explained this to 3 points we need to draw channel. So this point, the first low, the higher low, and the first higher high. See here. So 3 points. Just 3 points we need to draw a channel. So here, roughly, okay, here, all right, and this one. With these 3 points, we can draw this blue channel. And now we are waiting for a pullback. So you see here, so 3 points we need to draw the channel. Our pattern as a bullish Fibonacci trader, these are our guidelines. We don't want to violate it. So now we will measure the Fibonacci here. So we see 3 points, 1, 2, 3. We draw a channel. A pullback like this, we want to measure it. It's 23.6. All right. And then we will set our target with the Fibonacci extension. All right. What I say to traders, let me remove my Fibonacci drawing tool so the chart is not too visible to all traders. So suppose you don't know anything about Fibonacci extension. All right. You are just plain, okay, new trader or beginner, or you don't know anything of Fibonacci. All right. So you need this 3 point to draw your channel. You have it. So price went up after the 3 point and a pullback near this edge here. You use your Fibonacci drawing tool as I did now. You notice that it's at 23.6. Suppose you don't know anything about Fibonacci extension. What you can do is to use, okay, so the price went up from here to here. Are you following me? Pay attention carefully. You need total concentration to understand it, okay? If you have been learning Fibonacci somewhere else before, forget it. I'm not saying that what you have learned is wrong, but just pay attention to what we are doing here. So price went up from here to here, okay? After the 3 point that we have drawn to draw our channel. So suppose you don't know anything about Fibonacci extension, what you can say to yourself, because the move before the pullback is from here to here, we will expect the price to repeat at least that move. So that will be our first target. I don't want to repeat myself. You can replay the video to listen to what I've just said. That will be our first target. If you reach our first target and the move continuing, we will use the same measuring stick, okay, to project it again to the upside. So we use this every time it reaches the next target. So the next target will be now here. If you reach, you see, if I stop there, you see how I stop here. So are you following me? Suppose you don't know anything about Fibonacci, so you see that, okay, after your 3 points, you say, okay, it went up from here to here. So because it pulled back to 23%, your first target is the previous move, the length of the previous move, which is from here to here. So you will draw your warning line there and say, all right, if this trend happen to be successful, if the price reaching that level, I must watch it or grab some profit. In fact, myself, I'll grab some profit and I'll just take my profit. That's what I do. Just take my profit and go and wait for it to break above. You see here, you see what the price did again? Patient. It just went again above it nicely. And what it did, right, pull back again to validate the peak line as a support level. In fact, it went up a bit only to come back down to scare people, but the move continued again. Because it reached our first target, which is the peak line, and the move started going up, we will use the same measuring stick to project it again to the upside and draw again a warning line there. So our second warning line will be this okay, green line here. You see how the price reached the second projection and just went horizontal there, the green line, and come back again to the peak line before going up. Okay, because you roll it back to the peak line, we avoid display double bottom, validation of the peak line again, start going down, we use again our stick. So we bring it again to the green line, it went above the green line, we'll use it again. But this time you can see that it couldn't reach it, but it reached only the median line of our measuring stick. Watch the median line too. And then you roll it back to retest the green line, break above, retest. You see, that's what you're doing all the time. So you can just wait patiently. One target reach, grab your profit, allow trader to push it up to retest it. Sometimes they will go without you, doesn't matter. So here again, you use your measuring stick again. You see how I'm using just this? Look, everything has started here, just this here. We are working with this measuring stick only. Now we come here, we use it again. And we will again draw another line there. This is our third, another target zone. Okay, I'll use a different color, too many blues. I'll use turquoise this time, and this is it. Okay, all right, and to this point, all right. And if it goes above it, we will bring it up. You see how it stopped on the dot on our target zone, because the professional are doing exactly what I was doing here, which brings us exactly to this level. I'm running out of color now. I'll use black. Okay, right? That's it. That's it. You see now. So the point I want to highlight for Fibonacci traders, we want to be bullish Fibonacci traders, is to respect our pattern, which is the rising channel. We don't want to apply the bullish Fibonacci retracement outside the rising channel, except if we see a valid bullish area wave pattern or a valid Fibonacci pattern, talking about bullish Gartley pattern, bullish butterfly pattern, bullish cry pattern, bullish whatever pattern, that is a Fibonacci pattern. That's the only time that will violate our market pattern. I thank you for watching, and we will speak to you very soon. This is about Fibonacci bullish traders.